Good Monday morning, Market Chameleons, and everyone join us for the first time. Welcome to the Market Chameleon pre-market show with this man all the way from the sunny Jersey Shore, Dimitri Pargamonic. Actually, it's really gray here today. Is it gray there? It looks really sunny, but it looks like it's going to rain.
It was nice today. I took my dog for a walk, and it was a beautiful day where I'm at.
Nice
so far, but it's supposed to rain later on today.
It looks like it's about to rain outside my barn door right now. But anyways, let's get started with the disclaimer. What do you think, D?
Yep. So good morning, everyone. Before we get started, keep in mind, Will and I and Market Chameleon, we're not a registered investment advisor. We're not a broker dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor or call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
Let me share my screen. And if you guys are joining us for the first time today and you have questions, you can put those questions into the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question live, we also put out a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get to Zoom, click on raise your hand. We'll see that. You don't have to turn on your video camera, but then you could come on a show, ask your question directly. If you have questions about data, tools, analytics, if you wanted to come on a show and talk about strategies or things that you've been seeing in the market or doing that have been working for you, or anything you've seen that you haven't expected, you can come on a show, talk about that benefits the entire community. While we're waiting for any questions to queue up, what we'll do is take a look at the pre-market report, see what stocks are trading in the pre-market hours. I had a couple emails coming in over the weekend asking questions, so I'll start out with those. When any questions come in, you'll stop me and we'll take the questions.
Perfect.
All right. So here, this is the pre-market report, and these are stocks that are trading in pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. And I'm going to come down here. I see 83 stocks made our percentage gainers list, 34 on the percentage decliners list. So right now, from that perspective, we look like a more bullish bias at the open. I'm going to filter out this list to S&P 500 stocks. But before I do that, there was one stock that kind of stood out here that I might just show you guys, and that is this one, Coinbase here. It's down 5.3%. And that was, I believe, a downgrade in Coinbase by Goldman Sachs. And just kind of why I wanted to point it out, and why I think some of the things we do when we try to analyze data, analyze stocks, when we try to do research, we do that, for a reason, so we could understand the companies, because I do get a lot of requests. Well, what are analysts saying? Right? I get that all the time. What are analysts saying about the stocks? What are analysts, making predictions? And from my perspective, being in it for a long time, the analysts are usually very far behind, and they're more reacting to things than kind of anticipating things. And I'll show you one thing. Like here, I'm reading in Bloomberg, and I see this very frequently. And here I see a headline: Coinbase slumps as Goldman cuts to sell after 75% drop this year. And we see it a lot in Netflix and Facebook. If stock starts going up, there are going to be upgrades. But isn't that a little bit late if you're telling me to sell after the 75% drop? And that's why when we look at analysts, and I do get we talk to a lot of vendors to sell these feeds. And a lot of times these analysts, I see them all the time, upgrades, downgrades. The problem is there's no color behind it. There's no model. There's no like real way to dig deeper in there and figure out, well, why are they doing it? How are they coming up with these target prices? So just kind of wanted to show you, that it pays off sometimes to really do your own research and to really understand the businesses and the models and the risk factors involved in what you're investing in. And maybe what I'll do is, if we have a little bit of time, I'll start to show you kind of where you start to look to build your own model, to build, your own understanding of, well, when I'm investing in a business, I have to understand, what am I buying here? Like, what is the business model? What are the risks involved? What are the competitors? All this stuff you have to understand clearly so you feel comfortable with your decisions. So I might do that, if we have a little bit more time later today.
Perfect.
I'm going to come back here to, yep. So I'm going to come back here to the pre-market report. I'm going to filter this report now to the S&P 500 stocks. So to do that, I'm going to use this filter in ETF, drop it down. I could select from these list of ETFs. I'm going to pick SPY, which is the S&P 500 ETF. And here we see we got 10 stocks that made our percentage gainers list, 1 on the decliners list. So from that perspective, still looks like more bullish bias at the open. Not a huge list, but a little bit more bullish than at the open. If we have no questions, Will, what I will do is talk about seasonality, because I did get an email from there. It was interesting. I think it's from Rob. I was reading it this morning. So some good insights. We'll take a look at the market seasonality.
Perfect.
Okay. So to do that, I'm going to go to SPY.
Actually, a question did pop up about Coinbase. Laurent wanted you to go through your complete analysis of Coinbase. Maybe we can save that for another day. You can maybe look at it and come back to Coinbase, but he wanted to do an analysis of Coinbase like you've been doing with, and I don't know how much fundamental data we even have yet, because it's still such a new company, but
it's a new company, and we do have tools and data, but there will be research that you still have to do on your own, kind of have your own. And I talk to a lot of people who have been with Market Chameleon for a very long time, and they call me up, and even though they use our tools extensively for hours each day, all of them have their own spreadsheets, their own data that they're also compiling, their own models that they're working on. And that's what I kind of wanted to touch on, is where do you go? How do you start it out? Where do you start building it? How do you start making connections? And we'll see. If I have a little bit of time today, I'll start it out. Maybe I'll continue on it tomorrow as well.
Perfect.
Yeah. So let's take a look at SPY. And let me see. I'm going to go under tools, look at seasonality. And this is looking at historical performance of SPY, which is the S&P 500 ETF, month by month, to see if there are some months where SPY does it perform better, does it perform worse, typically in certain months, and which months are more volatile. So here I have a table here. These are over here by year, so we're going back 10 years. So this is 10 years of data, and it's organized by calendar month. So you can see January, February, March, April. So right now we're going to end June and we're heading into July. Okay. And here for we can see each calendar year, we could see how SPY performed in January, then in February, and the summary statistics are below. So we could see here in the month of January, in the last 10 years, 45% of the time the market was up, 55% it was down, with an average return of 0.7%. So, a little bit more of the times it was lower, but on average, it did eke out gains. And that's probably, we could see over here from the data that the up moves were higher on average than the down moves, right? So that's why we got that gain here. Going a little bit lower, we could take a look at the magnitude of the moves, how volatile has January been relative to the rest of the months. So here, on average, the move, so if we convert all the moves to positive, just to see the magnitude of the moves, so all these will get converted to positive moves to get the absolute average. And then we take the average of those, we see 3.9% up or down, with a high move of 8%, which happened here in 2019. And we had an unchanged here 2020. So now we could compare that 3.9%, besides maybe the month of October, tended to be, the second most volatile month, basically, out of the year. And then we have the median return. So here, the average could get skewed. So we could take the median return. So if you see here, unchanged. And this is the max positive move, max down move, right? So that gives us kind of a distribution of returns for the month of January. All right. So now we're ending June, we go to July, and let's see how July tended to perform. So we see here that it was actually, one of the strongest months. If I'm looking at it from the perspective of frequency of up moves versus down moves, we see that besides the month of, November. So November, 90% of the time the market was up in the month of November, which is what is happening here in the month of July. So comparing the average returns in July, up 2.7%, November up 2.9%. It was tended to be the second best performing month of the year, right? So 90% of the time, historically, the market was up. If we from the start of July to the end of July, and on average gained 2.7%, right? So if we even compared it to the other historical percentage moves, second best month of the year. As far as volatility goes, we could see here average move 2.9%. So as far as volatility, it wasn't, I see a lot more months, above 2.9%. We got January, February, March, April kind of starts to decline, August. So as far as volatility goes, seems to me like volatility is a little bit more subdued than the rest of the calendar months. In SPY, we could see here, if we take the biggest absolute move so far in July, 5.9%. And just keep this in mind, these are just guidance. You do have to take into consideration anything else that's going on in the market that's different than historical. And we have a couple things. We have, of course, things impacting the market right now. Inflation, we're going to get another rate hike, most likely in July, and more guidance on future interest rate hikes from the Fed. Still have the war going on, other issues with China. So all this you still have to take into consideration. But right now we're just looking at it from a historical return distribution. As far as largest, here's the median move, 2.4%. Largest up move, 5.9%. That happened over here in 2020. The largest down move, negative 1.3%. That was right here in 2014. Okay, so really quickly, that's in the S&P 500 seasonality. The seasonality in S&P 500. I think the other one in the email they were comparing it to was the NASDAQ tech heavy. So let's take a look at that QQQ. So this is NASDAQ 100, more tech heavy. And this is in 2022. We see we had a lot of negative months so far. Right? January, February, March was an up month, followed by April down, May down, June down so far. We've got a couple days left there in June. So how does July typically look? And here in the last 10 years, I'm looking back, so far July has been the best performing month out of the year, right? So from a historical perspective, NASDAQ 100 July has been the best performing month out of the year. We could see here that since 2012, 2021, all the month of July have been up for an average gain of 4%. So you could see there that the second best month in NASDAQ 100 is in, you can see November, up 2.9%. So I think that was the comparison in the email, S&P 500 versus tech-heavy NASDAQ. Volatility, 4% in July. Absolute average move, 4%. You could see here, not the most volatile month. We definitely have January above that, April, May. Best performing month, 7.3% over here, 2022. Worst performing in the last 10 years, 2012, up 1%. And here's the median return, 3.5% month of July in NASDAQ. So that was kind of the email talking about seasonality, giving some insights. So I kind of just wanted to share that with you guys today. Any questions, Will?
No questions popping up.
Okay. So let's do the following. So I'm going to take you guys maybe to, you could do either Coinbase or Roku, maybe, I could do any stock just kind of to begin the model. See, so Roku has a little bit more years. Let me see if I could. So Coinbase only has 1 year of data right now, but if you wanted to begin building your model right in a stock, you want to understand really what the company does, what the company does, how are they going to generate their revenue, who are their competitors, and what are the risk factors to the company. You really need to get a good grasp, so then you could start building out what you think the future earnings of the company will be. What do you think the assets are? And are there ways that you could even hedge off some of that risk? And how do you do comparative analysis, right? So let me start out with Roku. Maybe I'll do Coinbase tomorrow just to have more time on it. But I'll show you Roku. The place to go, right? The place to go is you want to hear from the company itself. And the company gives you more details on their annual filing. So I'm going to go to the SEC website over here. And on the SEC website, you have these filings. You have the annual reports, 10K. You have the quarterly reports, 10Q. The annual reports are more detailed. And let me open that up. I'll show you how to get there. And these tend to be big. These are like the things Warren Buffett reads, and these hedge funds, and everybody, they'll start reading it and creating their model from here. So think of it like if I had to create a pricing model for a ETF, I would go in there and start reading about the ETF. What are their holdings? What are the weightings? How do they calculate their NAV? Then I would recreate it, and then I could compare that to the market. That would be a little bit more simpler because it's really almost just like a mathematical formula, because I could reference the prices of the stocks that are holdings, multiply it by the weightings, figure out the NAV, and then compare it to the market. And if there's a divergence, the ETF might be trading at a discount. There's an edge to buying it. If it's trading at a premium, then there's some edge to selling it. With the stock, it's different because you're working with estimates, with assumptions, predictions. So it's much harder to price a stock than you would, like, for example, an ETF. But because it's harder, there's potentially much more or greater return. And here right now, we're on Roku, right? This is their annual filings, and the annual filings will look similar, with other companies. And first, they'll tell you about, over here, you see an outline. They'll tell you about the risk business, the risk factors. They're going to go into financials, but let's just start at the top here, and what is their business, right? So you want to go here, and the first, understand what is their business, what are they selling, right? What are the products that they're selling? They're going to talk about their strategy, how they intend to monetize that business. So over here, we got their model, their business, their streaming platform. Over here, they'll talk about United States, Mexico, Canada, right? They're going to talk about how they intend to make money. So what are you really investing in? And over here, they'll tell you that without having to read, there's a lot of information you'll have to go through. Basically, the way they monetize it, I think, is through ad revenue, right? Through ad revenue and subscriptions. So you'll understand that. Then you want to come down and read about how they're going to monetize it. What are the metrics that they use that's important, so you could track it as well. So I believe here they're talking about their calculated average revenue per user, right? So that's how they're tracking it. So they're probably reporting that quarter after quarter. So you kind of want to see that. You also want to know their competitors. And let me just come down here and I'm going to show you where the competition. That's also important to know, because this is directly coming from the company who they think they're competing with, right? So it's not like, I know there's classifications, but the classifications really don't always tell you that these are who they're definitely competing with. They'll describe to you who they think are their main competitors and what part of their business that they're competing against those competitors. So I believe, let me just see if I could find it as I was going through it. I believe, what were they saying? Like something like HBO was their competitor. So over here, Amazon Prime, Disney, HBO, Hulu, Paramount, Netflix. And then you would have to take all these and track them as well, right? So that would be part of your model, is you want to track how they are doing, because you're investing basically in the same business, and who's the best one, right? Are you getting the best deal in Roku, or are one of these better? The other things that you want to know are the risk factors. You know, they got to go in here, read everything that's a risk to their business. They'll talk here. Let me see. And put all that into your spreadsheet. Why? Because those risk factors are impacting their revenues. So if they say, you know, supply chains from China, then you know you have to, or tariffs, perhaps regulations coming their way, you have to track that and give that weighting a risk factor to know, you know, in your model, am I getting compensated for the potential risk? So really quickly, just wanted to kind of point out where to start going to start reading about what, you know, what the company does, how they generate their revenue, who are their competitors, and what are the risk factors into their business. And that will be in the annual file. So if there are no questions, I'm going to kind of leave it right there.
Well, that's perfect, D. Maybe we'll look at coin tomorrow. Thanks everyone for joining. It was great insight, D, as always. Much appreciated. You have a great day, dude.
Great. Thanks everyone for joining. Stay safe out there. Have a great trading day, and hope to see you guys tomorrow.
Trade in peace, chameleons. Have a great day.